So if we keep the wave count like this, you got a wave one, down, two, three. So here's your fourth wave. So let's see how market opens on Monday. Then we're gonna have Tuesday, and then we're gonna have Wednesday. That's where we're gonna have those big earnings with Fed. So now keep in mind, we're up 8 days, right? So if if we do get one or two lower bars, then we can make a case here of a fourth wave. So we're look for so now we get look. I mean, we're sitting at what 6,100. Some 6,100 down here to 100% relationship, which is 6058, right? Meaning that 4 versus 2, meaning the distance travel here in wave 2 will be the same equal distance travel here in wave 4. Then we have 23.6, which is the 6050. So you see, you have 100% and you have a 23.6. So this is going to be the first zone that we could watch if the price will to come back. And then the 38.2 right there is at 6,000. So we're talking almost a 50 to 100 points downside for now. If we get a surprise on because whatever the Fed says on Wednesday, Trump is gonna come back right away. Just keep that thing in mind. I mean, we're just he did exactly the same thing what he did last 4 years ago. He's against higher interest rate and he wants to bring these rates down. Um, and cutting rates, market doesn't really like it. And if you notice that, market just doesn't like low rates now. So if you notice, the last job report came out. I mean, because we're in the market right now that everything is good is bad for the market, and like any good data comes out is bad for the market. If a bad data comes out, is good for the market. you know, the balancing part is so difficult. It's literally upside down. So just like I mean, the other thing is so I would leave the wave count like this for now. I mean, these are all the upside projections from here, but got so many of them. I've ran a bunch of them, so it's just a matter of like, let's see how Monday and Tuesday goes. I'll just leave the count like this, and that gives basically 100.50 to 100 point window to the downside, right? So you have this zone and this one, and see how the fourth can settles here. And then from there, we can see if one of the um, strong earnings comes up, it could because market is going to respond based on especially those big names, especially Microsoft is going to, but some of them are baked in as well. So first, everybody thought like Apple is going to be down 10%, is going to drag the whole market down. Yeah, it doesn't look like it. Market is making new all-time high. Apple is down over 10%. Yeah, those days are gone. And then people still thinking, sit in with the hope like, oh, yeah, roll over a big name, one or two is going to tank the whole market. No, not anymore. Just you can see it. You know, it was before it was all about Apple goes down, so does the whole market because it's such a big, sitting in Dow 30 stock, sitting in a Nasdaq as well, and S&P is gonna, yeah, nothing. Look at it. Look where the market is right now. So can this is one way to look at the if we don't make a case here of five. I mean, I really don't like to fight these smaller waves because they're very challenging. I would rather just leave it like this, you know. These are your upside projections. Let's just see how and where the fifth wave will settle eventually. And then it would be due for some sort of a correction back. And now the question is this, that you have this fourth wave. Let me do this. So you have this fourth wave that lasted 90 bars. Okay. This is a 2 hour chart. It's a 90 bar. Why did I wrote 1 hour here? It was a 2 hour. No, same thing. So it's a 90 bars here from this high to this low. So now copy paste this thing, and now you take the same low and take 90 bars here. This is going to be your minimum time frame. Minimum. If, you know, so if we take this, extend this thing up here, so now you have this window from here to here. That puts down to till what, January 30th. Okay, almost. Oh, now it's calculating the weekends as well. That's why I like doing this over the weekend. January 24th, you see 26, 7. So you're just gonna watch this for now. Leave it like this. Just to see how this two side by side goes. I have them on a GAN that gives me this is much better for me when it comes to time. Because when you go to Elliott wave has those fib time relationships and stuff because Ralph Nelson really didn't spend much time on time analysis. They just Elliott never put any kind of a hard set rule on time. Well, nobody can time the market. So he just laid it out as more like as a guideline. You could kind of like look at as a wave two relationship compared with wave four. So you can just take this to see like, okay, well, how long is my wave two lasted? That's basically 2.1. What kind of low is that? 33 bars. So you got 33 bars here for this correction. This one went 90, so meaning went three times more to complete because it has so many back and forth whipsaws. So now if you take the fifth wave, sorry, the wave one, how long that one was. So you could compare this way as well as manual. That's 61. Okay, so if you take 61, fit it here. Make this one 61 from the low. You can do this thing as manual as well. There's 61. So 61 will give you the exact measure time relationship of wave one. Because remember, wave one has a relationship with wave five. Okay, because these both of them are actionary waves. So you have 61 bars here, 61 bars here. So you just look for, you see, you still got time. So you got time to go. But it all depends which time frame are you working on. So if you're going to extend this thing out to a 6 hours, you see, it becomes 30 bars now. You see how it changes? Now if you go back to 2 hours, it goes to 61 bars. So obviously the shorter the time duration is, more price data do you get, right? Bigger the time frame is, shorter bars you're gonna get. It's all about. So it all depends. If you're gonna go to 1 hour, the daily time frame, 7 bars, 7 days. So you don't really. I mean, a lot of you guys don't know. I mean, but it's very tricky. put yourself into a fighting 1 hour, 2 hour time frame for this kind of a relationship. You rather just stay on 1 hour. I'm sorry, on a daily time frame is gonna give you a much better idea. You know, yeah, you can't time the market is not easy. You know, it just takes a lot of time and a lot of practice. But Elliot does help, and but this is the most powerful tool that I have in my arsenal. Basically, it's just Gann swing. That helps me a lot. I need confirmation from here, then I can make the wave count work really good because they're gonna both work side by side. So um it doesn't matter. I mean, I would just going back here. So time is very important. Very, very important. It all depends on which time frame works for your style of trading. This is my favorite time frame, as you all know that, which is 195 minutes, half day chart. You know, if you start trading on the 195-minute chart, you could, I mean, you could trade, I would say, almost 2 quarters on any chart, any price that you wanted to trade, if you take a half day chart. So it's just, it, it cuts all the emotions out of the trade. 1 hour, 2 hours, 4 hour day. I don't, those are fine. Yes, you can get more price data and then you keep changing your wave counts over and over again, this and that. But if you have a half day chart, okay, like a yesterday session was all of this, meaning that every single day, every single trading day, you get 2 bars. The day is over. It's a 6.5 hour session, right? So you're gonna for a half day chart, you get 2 bars. Not three, not one, not four, not five. Only two. I've spent years and years on this time frame. I choose this time frame over any other time frame. Daily, weekly. I mean, weekly, yes. I mean, that's just a much bigger time frame, but half day chart is just the wave count works really good. Time relationship works really good. Fibs works really good. But the only thing is that when you're buying something for a month or month and a half, is you're kind of short on time. You got to buy more time, So that's the only thing. So more and more time you buy, more you pay. Now you're going out to buy time, well, the premium is going to cost more money as well. So then you have to, um, consider spreads. That eliminates the time decay and you just kind of let the trade work. So just, I can only tell you what, based on my experience over the years, what works, what didn't work, which I have tried. I've tried everything. And I traded every time frame as well, and I know that which time frame has a much better results, the outcome over, on your trading. So um see, it changes as 48. I'd rather just, so if you notice this, You see, like everything is going toward this January 20th, right to the end, right? And if we're going to go back here, we completed 39 weeks as of yesterday. So we have one more week to go. Now, if we go back here and starting to see like, okay, well, 48 bars here to 48 bars here for wave five. Now you look at this thing, then you go back here. That's 40-week cycle that I've been tracking for over 2 years now. And what we are 23. Here's the thing about look how market is trading so well. So this is a cycle four. This is a three. This is two, and this is one. Right? So we have a bear market down here, 27%. We rallied up for 40 weeks up to this bar. So we have two corrections there, 9 and 9. Managed to rally it how much? 31%. Took a dip down 10%. Now, if you take this low, projected up here, that's 28%. There goes another 5%. Now, if you look at cycle 3 and 4, 10 here, 10 here, 5.5, 5 here. You see? So these two cycles has exactly the same, I mean, not almost to the penny, but almost to the same number. 10% here, 10 here, 5 and 5. So if you take this 40 weeks, okay, and fit these two corrections here, you can fit the same exact correction. This is the one we just had. And where we go, we just made a new high again. So now if you pay attention to this, what happens is that every 40 weeks, bear market was down 27.5%. Then we rallied up for 40% for 30%, 31%. Another 40% cycle went up 28%. Now here is the fourth cycle that we're in. That's what I was trying to see. Like, okay, we need to keep this average down to 28% because it's the same thing here. And each 40% cycle has two corrections, 10 and 5. First one is a 10, and then it's going to be the fifth one. You see, 10, 5, 10, 5. But it all fits here within a same 40 window as well. Now my only concern is this, that how much is the time duration is between the 5 here and 5 here after the 10. Let's look at them. So now we go. This is one of the best cycles I've ever seen. Okay. So pay good attention to it. This is where all the timing comes into a play. This is a really, really good cycle. Okay. So let's do this. So we have 10 here, 5 here. Let's see, what was this? So we have 10 here and 5 here. That it took 22 bars, meaning 22 weeks for this fifth wave. First of all, for this 5% decline. Then we take this low to this, that was 17 weeks. So we have a 22 weeks here and 72 weeks here from 10, 10 to 5 to 5, right? Now you take the 5% correction, which ended here, So you take this low, 13 weeks, then we market had a 10% correction. So now if we draw here, that'll put us to April 18th. If you're just gonna compare these two. Okay. Now you could be short a week or you might extend another week. But that's okay. 1 week really doesn't make or is gonna not gonna completely destroy a cycle for you. One week doesn't really make a big difference. But it's all about the timing. No cycle defines any high and any low. Just get that thing out of your head. That doesn't work on cycles. Cycles all about timing. What happens is that when 40 weeks completed, which was completed here, but then you see like how it kind of like it slightly made a new high next day, and then it drops 10%. Because basically, cycle was completed here. Same thing here at this low. This whole 40 weeks ended here at this low right there. So your ideal cycle always, okay, is when it starts from that weekly bar, and then it's a matter of like which direction the trend resumes, and it has to hold that low. Okay, meaning that this is a second week, third week, four, five, six, seven, eight, and then depends how the trend resumes to the upside. You just have to watch that. So what I'm gonna be watching next week is I want to watch a weekly bar open and close right here on this line. Let's see what it's going to be. So this is the one I'm going to be watching really closely. Then from here, what we have is we have time until November 7th of 2025. I'm going to stay on top of this channel as long as it lasts. Okay, it's been going really good. So it's been going really good. So we're just gonna continue tracking this. Again, this is a weekly time frame, so it takes a very long time. It's a 1 week bar, one weekly bar. So it's better because bigger the time frame is, you have a much better view of looking at price. So I would I would just stay on top of this. We like every Saturday we sit here and look at everything. So each, every Saturday we're just gonna look at them. So the average, what I'm, well, I still have my finger crossed. If we could average this thing back to 28%, that would be really nice. But that all depends if we can climb back to this 63, 50-ish, kind of like 60 area. I mean, we're close. We're very, very close, but we still have another week to go. Okay, so this one is still 3.7% away because we're at 23.31 so far from this low, from this 40, from the 40th bar, with the 10 and 5 correction in between, in this 23% rally that we had. So getting back to this 63 kind of mark, we're still kind of shy by 3%. Is it possible? I mean, it is. I mean, anything can happen. We don't know that. But I guess, which all depends on Fed and all depends on earnings next week. So we're going to be watching. We'll see how the bar open and close here for the next week. We might just stay around the 66,000 to 6,100. If 61, what is the high here? 6128 is the all-time high. So if come down 50, 60, 70 points, I mean, then we're pretty much out of time. A good thing what I'm pretty sure that everybody's excited about, that we're going back to a full trading week starting next week. So no more short week of trading. I can't stand this. It's just terrible. We only had one full trading week for the last 8 weeks now. You know, bunch of holidays came, and all this, like, this week was over. With MLK Day, with inauguration with him on last Monday. So it's just, yeah, short week is just, premiums are just gets hurt the most. Um, so we'll see what happens. I mean, we still got one more week to go, but I mean, we're looking pretty strong. This is the previous high right there. I mean, this is a 127 extension. This is 161.8. So do we get a bit of a pullback? If we do get a pullback, yeah, I'm a buyer. I am a buyer. So unless the only downside risk that we can say, like, if anything, I mean, anything can happen. If VIX or anything uh, pops really, really strong, I mean, can we just mark this one as a fifth wave and consider something? That would still gonna take several days. You can't make anything, you know, you need a lot of downside pressure here. Um, for price to roll over. If you notice, this ATR right there is increasing as well. You see how starting to go up? The market is definitely extending. 93 points almost for a week. Well, it's, yeah, 93 points, 14 periods. So, yeah, I mean, I like this, but I'm gonna just say, if this blue signal, my magic signal, this thing keeping me bullish, and I'm gonna stay bullish. Nothing bearish about the market at all. Not if we're making new all-time highs. And then on top of it, where is that thing went? This being down for 6 straight weeks. I mean, yeah, you could have an inside week here next week. We don't know that. I mean, we gotta buy some. Market's gonna take some time, and RSI is not even overbought either. So if we go back here, I mean, the only time RSI went oversold was here, below 30. This is almost touched the line here. It's barely 33 read, 34 read. This one all the way down to 13, because it was down for 5 straight weeks, and then we got this big pop, the you know almost a 50% retracement of this, but it took another 2 more weeks. That pushes this RSI all the way down to the bottom. You see 31. Now, if you notice, you see, if you just remember this, that if you keep an RSI on a weekly time frame on an S&P, what does it tell you? RSI is coming to 31 to 32 range at reading. See 30, what's the low here? 31.97, 30.61, 35, 136. It's the best way to buy right there. Give another week or two, that's it. Market don't stay oversold. That's the thing most people don't understand. They're still pressing buying more ports. You have an oversold market. You have a market which is down 5 weeks in a row. What do you want? 10? You have 500 stocks in the index. S&P 500, 500, and you think that not half of them gonna lift the market up? And then the top of it, that the market breadth was so bad, right? That we've been watching that we have a lot more decliners than the advanced. Well, it's not gonna get worse than worst. It will improve. So the betting, where would you bet the market? I would bet the market to the upside because if you had a market breadth which was so bad, like meaning the stocks are declining, they're coming down for 6 straight weeks in a row, what, they're gonna go down seven, eight? Where do you see seven, eight here anyways? Market S&P has never dipped below more than six lower bars. I highlighted all of them here. We never went seven, never went eight, never went nine. Even this is almost a 9% correction. This was almost 10% correction. That was all done in 4 weeks, 1 month. So if you just look at a time frame here, you got one, two, three, four. That's 1 month. Another 2 more weeks. That's a month and a half. Month and a half. The market hasn't even made the S&P hasn't even made a single higher bar. Think about it for a second. Month and a half. And what went wrong? If you really look at this way, well, okay, because we're ending a very strong bull market, because we're right approaching to the end of the year. So people are not selling their stuff because of the taxes, this, for the tax purposes. It was just a year in consolidation. That's the only way I look at it. There's no major news. There's no catalyst like, the world is coming to an end. That everybody is like, yeah, just get on the market because market is up for like 2 years in a row. I mean, if you look at the year high and low, so this is the year which is the previous year, right? This was the low right there. That's the high. So a lot of people right now cannot understand this, that everybody thinks we just like rip for 2 years in a row. Okay. We even had any kind of a pullbacks. Here's your year started here, which was 2023. 2023 was 26 until December 29th. Then you take this low to this high. Too much green there. 30 year. So you have 26% on 2023, 30% in 2024. But fine, that's good. Amazing run, But you have these dips as well. Well, that doesn't count. But a lot of people, they make it sound like, oh, we're up back to back 2025. We're just like going like this, straight line at 30%. These dips are getting bought with 10 and 5. So I think Brian was somebody else was asking me put a comment yesterday on a post saying like a 10% average of S&P. Yeah, if you look at the history of an S&P 500, S&P has a average return of 10% for the last 50 years. So how do you outperform an S&P 500 for a year? Okay, if you think about it, how do you outperform an S&P? If S&P has a 10% average return, okay, I'll just put AVG here for the last 50 years, okay, and if we look at the I have that I'm going to show you there's the data. So 3 years is 11.43. 5 years annual rate of return is 13. SMH is 23, 28. Qs are 14 and 18. Transports are dead. Russell is, you see, Russell is just look at the small cap and growth compared to small. I mean, it's tough to fight small caps, to be honest, with higher interest rate. We can see that. And this one is coming close to that nine to it's getting close to that 10 if you look at them here. So 3 years is this, and then 5 year I can delete this in 20 and 19. I don't need this, but doesn't matter. So from 20 to 21 is this. So how do you outperform the S&P? The out Well, the only way you're going to outperform the S&P is, where did we go? Okay, it doesn't matter to stay here. The only way you're going to outperform the S&P is if you buy a 10% dip, okay? So you stop, meaning that it doesn't matter what the price is, you just measure a 10% decline. So you buy the 10% decline. It could be 11, it could be 12. It doesn't matter. If you're down to 10, you can handle another 1 or 2%. It's not a big deal. So from 10%, if market rebounds, okay, goes back to the flat line, which is called 10%, right? So you get in a rebound back up, and after a couple of weeks, so now market is flat for the year, but you gained that 10%. Then from here, if market trying to manage end the year with another 10% here, you went up 20, market went up 10. That's how you're gonna outperform the S&P. When do you buy the market? Every time when you see a 5% dip. 10 is where you're gonna go to start buying heavy. But how many months of price that if you look at them here, it's just 10 up, 10, boom, 5, like every 5 to 10% dip end up making a new all-time high. But if you look at the response, like, okay, so how much of an upside do you actually see when market comes down 10%? How much does it go up? 20%. 10% from here, 28%. 5% from here, 14%. So you could compare these relationship as well. 10, 9.7, call it 10. 10% to here, 20%. 19.15. There you have another 5%. You see, this is what, I mean, I don't know. I mean, I mean, I don't know when the next 10 will come, but next 10 is, I'm a 100% buyer.
Hello,
So
can I
if,
interrupt you a second?
yeah,
So what you are explaining is like it's so S&P 500 is more predictable
of course
and
not.
yeah, but there's a clear patterns as you explain. So why don't you do more trade, for S&P
You want to trade
500?
indexes?
Yeah, do options, at the minus 10% dip, buy. calls and, 28% up, buy puts. Then you can outperform even more than S&P 500 performance because you're
Right.
pretty good at, spotting these patterns. And I don't really see you post, trades for S&P 500. So why not?
I do um I do like bunch of butterflies and things like this. I do a little more complicated strategies, when it comes to indexes. Some of them I'm not gonna be able to do them. That's another thing for me. But I don't know. Some of them are just kind of so against having a margin account. I just don't understand why. Um,
The retirement accounts, some of the retirement accounts, they don't allow margins. Like a
uh,
401k, they don't allow margin trading.
well,
You
I
know,
have an
I
IRA. I have an IRA account. I have a margin. I have a margin.
Yeah, I do have IRA account margin
Yeah,
too,
you
but
can trade. You can
the
trade
yeah,
spreads.
but for example, Schwab IRA doesn't allow uh single call or single put. It allows only spread.
You no base. You all you need is a tier two. If you have a tier two on Thinkorswim on any one of your account, you could easily trade spreads. The tier one won't let you trade spreads. You just need tier two.
Yeah, as I said, spread only. They don't allow single puts or single call
No,
in
I don't
Schwab
think so.
IRA.
Wow, I could buy
I'm
a
on the
call. I could buy a
uh,
call or a leap on my IRA account.
on Schwab,
Yeah, on Schwab.
but Schwab doesn't allow level three for IRA. Only up to level two.
I never had that experience. I mean, I trade. I have my retirement account. I trade butterflies. I trade bunch of stuff on S&P. If indexes are not cheap, so not of you S&P trading at 6,100 and trying to buy something for 6,000 or $7,000 premiums, and they're not cheap. The only way you're going to be able to trade an S&P is just got to trade with spreads to cut the cost. But those premiums are still not going to be that cheap. I mean, you're talking 1,500 $1,600 worth of a one single call, even on a spread as well. But that spread of for 1,700 $1,700 is only going to give you four, five, six deltas. So you're risking 1,700 $1,700 on a spread with a delta of 5 to 6 points. Now you got to size up to have at least 15 to 20 delta. You're talking over $5,000 alone. Debit play just to carry at least like a 20 delta, 15 or 20 deltas per point is doable. But at the same time, well, there's not that many people out there comfortable risking 4 to 5 grand. They're looking at $4,000 to $5,000 cost, but they don't look at exactly what the delta is because the number is, oh no, I don't want to risk that much. It's too much. So that's why most people are are trading SPY with cheaper premium. So there's, I mean, if some of you guys have a decent size account, I could definitely start putting trades on for this year. Well, some of you can take it, but then some of them are gonna left behind. They're like, well, I cannot trade this. Well, then you're gonna see like, well, this guy is making this trade plays out on the index. On the other guy who's sitting there like, well, I cannot trade it, and I missed out on that trade. So I mean, I try to treat everyone fairly. I mean, that's not how I mean, and it's not up to me to decide for people like, hey, you're gonna have to have at least 50, $60,000, account. Well, not everybody has it. So what are you gonna do? You know, it doesn't mean like, well, that you're just gonna go and load up your account. Some people don't have that. So what are we gonna do? So you work what you have. So
Right.
buying the
Work what
price.
you have.
Well, all everybody started what you have. I mean, and then you just try to grow what you have. It's the here account sizes. Okay, is totally relevant. It doesn't mean nothing. Okay, it means nothing. You have $100,000 account, you have $50,000 account. It doesn't mean anything. Your risk is if you have a defined risk per trade. Okay, having an account size means nothing. So if you have $100,000 account, if you're risking $2,000, so you have a $98,000 in your account, right? They're just sitting there. You're not doing anything to it. You're only using two. So you try to make something from that 2 grand that you just put them into a trade. Now, if you want to go up and say like, well, I want to buy 6 or 7 different positions, that's not no, not an options. You cannot run 7, 8, 9 positions all at once. It's nearly impossible. Every trade is different. Every trade structure is different. Every trade timing is different. Every trade has its own personality. How can you make and run 8, 9 positions all at once? Somebody can just give me that answer. You cannot. You absolutely cannot. So you have a 9 open position on a board on option. First of all, what makes you think that you're going to be right on 9 positions all at one shot? Okay, I just wanted to, I wanted to know this. What makes you think that you're going to be right on all 9? If you have 9 open positions, or let's say you have 7 open positions, 9 is too aggressive. Even if you have 5, let's talk about just a low side. What makes you think you're going to be right on all 5? Because you have one position here, which has 30 days. You have second position here, which has, let's say, 45 days. You have third position here. You want out 2 months. This one, you probably scalp something for 2 weeks. Fifth one, you're trying to fight something like an ODT option. I mean, you can't keep all the timing the same. I mean, because longer, more and more, you're gonna go buy, more premium you're gonna pay. So you got a bunch of calls that you wanted to throw. You have every single day, you're gonna have probably like, well, I don't know how many contracts do you have, how much size that you take in all these 5 positions, what kind of a negative theta that you're holding every single day that is coming at you just to hold those premiums that just keep adding every single day on those 5 positions that you have working for you. And then on top of it, what makes you think that you're going to be right on all 5? Okay, worst case is you right on 3. Okay, so the threes are start going up. So you have 2 positions that are going down. So the 3 that are moving up, the 2 of them are eating that profit because now you have 2 going against you and 3 are the ones start paying you. So you're losing time on this one by going down and you're giving up the profit on the ones that you're making money on. So where are you going with that thing in the end? Worst case, like, okay, you have 4 position, market pop really good. You have 4 position working, and then all of a sudden one is just kind of sitting flat. Yeah, that will be the ideal. That would be the ideal well, a beautiful looking board for you to look at them when market rallies across the board. You have 4 position, one might didn't really move much. Yeah, all went your way. But how often does it happen? There's a lot of stocks the market goes up and they just sits flat. How many times do we notice, look at them like market is up like 200-300 points. We look at some of these big names like uh, perfect example, Apple. Market is to an all-time new high. Apple is down like 10%. It's kind of rare to see the world most valuable company is down 10%. Here we have, that has the most weight on every sector, including the top indexes. Dow 30 and you take Nasdaq 100. The top leader is down 10%. Market is all-time high. You see, it doesn't make sense. It does not, but this is what it is. So the people who was holding some Apple calls and stuff last week, they was like, wait, what's going on here? You got market ripping, then you're thinking like, what's going, you just having those doubts, like why Apple is not moving when the entire market is going up. You got stocks like Boeing and UPS are like up like 3 to 4, 4, 6, 6, 6 points, and you got Apple down. Kind of, it's a little frustrated. Like you think, like then you like, am I on a right trade? And things like this. You just have all these different, all these different thoughts. The point is like running multiple positions. It's very difficult. It's very stressful. You know, that's why I always, and you, I'm pretty sure, know the same thing. Less is more. Always remember that. Have you ever seen me holding five positions all at once? Never. I never did. Never will. Two, three, yes. That's the most I will do. I'm comfortable with that. Two is my ideal, I would say. Two positions is good. Plenty. If I'm right on one, if the other one going against me or something, at least I have time. I'll see if I can try to win at least one, then I'm gonna look for another one. I'm just keep moving. I'm not running four, five, six positions all at once. No thanks. Well, I mean, I still trade 15, 16, 17 positions a month. Sorry, yeah, if that how many positions that I trade every month. I'm not trading 30, 35, 40 positions a month. Hell no. I got better things to do. I'm not trading that much. It's too much headache. Um, what's gonna do? Yeah, that was a painful decline. But then the question is that a lot of people getting hurt here, but nobody remember this. Every single one of us, okay, were trading this time, this time, this time, this time. But then when we came down to this, oh, this is a 15-year top. That's it. This is a 15-year top. This is a 15-year top. Every single time you get to hear this. This is the market top. We're coming off on the bear market. That's it. Every single time. Now, there are plenty of genius sitting out there. This is the market top. That's it. Every new high market top. This is it. Now we're like, really? It's just, I mean, that's why, what was that? Scott was saying yesterday. It's like, I don't spend much time on Twitter. It's like, excellent. Best thing you could do to yourself. Um, what I was gonna show you. Let's look at a couple wave counts and stuff. S&P, we see. This one, let's leave it like this. Well, we have our projection here. We don't need none of that stuff down here. We just gotta have to see how can this be like this. That's can make all of this one, then two. I mean, I you can open upside. That's not a problem. You know, you can definitely do this as well. You can make all of this as a one, totally valid count. Go like this with you got one, two, three, four, five. There goes your two. Down here like this. You can do this as well. And then from there, when this second settles, then you look for three, four, and five. But the point is, you need to fit five smaller waves within this higher, like meaning five smaller waves into a one higher degree, a fifth wave. So there's many ways I could do that, but I'm not gonna ch change everything. But we're gonna see how we go with the earnings and with the Fed. This is plenty for now. No need to. I would just make a case here like this, and then like four versus two, four versus three. I just leave it like this for now. So if we're gonna come down here, then we'll worry about here. So just leave it like this. Yeah, this is very difficult to fight this fourth, fifth, and um, jeez, this thing. I don't know what's going on with motive wave. So you got one, two, three. You can make this three, four, then extended fifth. That's there you go. So you can do this. Yeah, this is fine. You can just kind of look for this, wait for these, wait for these earnings and see how they manage to settle within this 100 points. And and then we can see if we can make one final push back to the upside. I don't know how much time that we chew, and then we're starting to see if any kind of a correction will starting to unfold, you know? So, so then, well, you're not gonna go there? Hang on. Why? Well, you're gonna go through a US bank. Okay, then take it. I don't want to put it in your purse. So then, I did change that, the license plate. Sure. Okay. So, the, so we'll see. We're just gonna leave it like here and we'll see how it goes. Few other things. Apple. I mean, there is absolutely nothing bearish about that stock. Um, Apple just starting off the year um, by pulling back. If we go back to the last year, if you notice here, December 15th, right? Right, a little before, right on Christmas, like a week before Christmas, 17.80%, right? I did that chart. I don't know what the heck happened to it. I lost it. I Let me see if I could. I don't know if somebody saved. I had that chart here. I did post that one on a Slack as well. Um, that was showing those. I don't know where it went. It's crazy. Okay, doesn't matter. Um, where did I went? Yeah, I don't have. I don't know what did I do. I had the old one, which was here. So this is a weekly. Um, but this is gonna take a long time. Um, this is still good. I'm not. I understand it's pulling back here, but if here we can do this here. Let's focus on this part. Okay, so we're down 15. We were down before 17. We were down here 17. We were down here 16. So what do you see here? You need to go, you don't need to go that far back. That was a big one. 29. That was when we had 2023. 29. It's almost penny to the penny, 29 up, down 29. Simple call like a WXY. So you really don't have to go that far. You can just look at three or four of these decline that just can pretty much starting to give you a pretty good idea like, okay, where I could potentially start buying something. So we're down 15.65, 17, 17, 16. So we can go another 0.1%, 2% down. It's going to bounce. Okay. Apple is ready for a bounce. I took a shot at Apple this week. Um, we closed the trade. That was a short one that I did. And I got out at 225. I think it went up to, that was this week. That was what? It went up to what, 226? No, that was the high because Apple gapped down this week. 226, but it closed at 222. So because I own a lot of Apple shares, I understand they're getting hurt, but it's okay. I'm fine. I have other positions that are working as well, so um I had to I had to hedge, meaning the money that I'm giving back now is that's what I was trying to I swing, that spread to see if I could offset some of the money that I'm giving back. So I'm glad it worked out. Um, but the point is like on Apple, you have so many of these, you know, dips right there, to the almost to the same range. Now, if we go back here do a blank. I had that chart. I don't know what the heck happened. Now, if we go here to a weekly time frame, change that thing. So we're down what? Apple is down for 4 weeks. Just keep that thing in mind. I gotta change this thing because I always do. Here's your weeks down. So it's down 4 weeks now. Apple was down 4 weeks here as well. This was 7 weeks. So we could do a show bar and then we can do, that's going to be a default one. Let me see. We could do lower closest 4. There you go. So I narrow the search for you. These are the days. Move this thing down. So now Apple is down for 4 weeks. Apple was down 4 weeks here as well. Okay, so how much Apple rallied? 8.7% last time after being down for 4 weeks. This one went down 7. You got 4 here, 5, 6, and 7. Well, that was way more steep. So now the question is this. Apple earnings are coming next week. Okay. And Tesla as well. Tesla is down for 4 days as well. This is down for 4 weeks. So you could take 15 here and 15 here. See how it matches side by side? The time and the percentage decline. So what are we looking at to the upside on Apple if we're gonna bet? First of all, 227 is the high. It will be the first target that we could look for, meaning that we need to look for a higher weekly bar. So for Apple low was 219, upside was 227. Stocks in right now at 222. So from so you have 2 point risk to the downside, 5 point risk to the upside. That's a pretty good risk to reward if you really look at it that way. You're risking almost what, a little over 2%, 2 points to make 5 points to the upside. If the earning comes up and good and Apple will end up could or it could be a 5 weeks down for this, but down only 4 weeks going into earnings. I mean, I don't know. Uh, it's hard to um, um, predict earnings, but the only thing is this. Okay, this RRG. You see how flat it is? This part. I mean, the momentum is definitely down, as you can see that. It doesn't have an angle, and it doesn't have any kind of velocity either. So this I've been showing you this thing every day. You see it velocity is 0.77, heading is 267, distance is kind of 6, which is good. It's kind of pretty far away from the benchmark. It's a good distance. So basically it's on a 6 decile on that. Um, Ratio 94, momentum 96. You see, it's just compared to the other ones, like Apple is like going way in the opposite direction on Mag 7s. So I got Chipotle in there. So then this is not gonna help. If this I took a shot, as you all know, I'm going to take another shot as well. So, but I'm watching this. If I see Apple starting to go like this, oh, I'm definitely buying. But you gotta wait. Just wait. Let me um, wait another day or two. I need to see some momentum for me to put a bet on it. I'm not gonna bet anything at this kind of a flat line. It just will not unless you're looking for a 1 2 point trade. That's different. But this is not gonna help much. It could improve. It will improve. We, if you look at how Apple got there, I can move the slide for you. There's Apple right there. You can go back to say here, start the year here, January 2nd. So Apple was right there. So does the rest of the market. That's when um, all the stocks were starting to come back down. Here's Tesla way down here. See like how Apple went, and then a lot of those stocks, you see, didn't really push back here. Netflix and Apple. You see how Microsoft, how Tesla, and it's coming, still there. Look how all of those Mag 7 stocks. Look at Nvidia, sneaky Nvidia poster child. Look from Nvidia, look how Nvidia was. I think they're just keeping Nvidia Apple side by side, meaning that Apple tanks, Nvidia goes up, Nvidia goes down, Apple goes up. I'm noticing that a lot. And pay attention to these two stocks, you know? I've been seeing this for the last two months or so now. Because this rotation is opposite. Like look how let's do this. These are the top players, right? Let's do this. Let's look at them side by side. You see how they're trading against each other. Like you see, improving, leading. They're trading opposite. That's what my point is. They're just look, Nvidia rallies, Apple weaks. Goes to the weakening card. Look. There you go. See, they're opposite. And now if we do this, put Microsoft in there. See? Microsoft. But the only thing is that I don't like the rotate that too close. You need something far back here. You need alpha, So more and more alpha you have, better and much bigger expected move that you're gonna see on a stock over time because it's taken a wider rotation and looks like this Apple, this all these fake news, they're coming in toward this Apple. That's the Mag 7 ETF. Go to the Mag. But look where Apple is now and all the rest of the stocks. See, that's what my point is. Nvidia is and Apple is just a two um, opposite direction right now. So if you go back here, see Apple is down 11. Tesla is flat. S&P up 3.7. Microsoft 5. 5.5, 5.5, 6, 7, 9, and 10. Meta is back to a charge at, 10% here. So Netflix seems like it going to the moon, going by hitting that $1,000 mark. It's almost 10%, but this one didn't even report earnings yet. Meta's already up at 10%. Amazon is at 7, Google at 5. This is the only one. You see, like, this is really to kind of see. I think I deleted that Q4, but I can make it again just to compare. Because if you look at Apple's seasonality was pretty strong, right? For 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 January. It didn't play out at all. As you can see here, Apple had a pretty good average since 1983 until 2025, but not where Apple started the year. It's down now. So if you look at Meta, Meta is doing fine. So you can look at Netflix. Netflix is kind of, I mean, we're at 25th right there. So Netflix is fine because they just had their earnings. Amazon is fine. Nvidia is okay right there. You got Google here. It's okay. So all these stocks are doing good in January. They have Tesla here. You see kind of like a little rough start. So Tesla is here. I don't know. I mean, if this plays out in Tesla, I mean, there's a good probably, chance that Tesla will be okay on earnings. So I mean, it's flat, first of all, for the year. Um, Earnings are here. The seasonality, it looks green. It does looks okay, looks good toward the end of the year, toward the end of the month. So we'll see how the earnings plays out. I don't even know what happened to the chart. What happened? This chart just disappeared. I did post this thing yesterday. Glad I did on the Twitter. So I can. Oh, where the heck my Twitter went? Here. This one. So I did this one. I had this thing. I don't know. I opened this one this morning. Kind of disappeared. So this is a daily chart. I mean, we can go back to the wave count. It's really the same thing. It really doesn't make a difference. So we're down 4 days. Okay. Now on Tesla. So this was yesterday, day before, because we have a short week, remember? So for 4 days, so you look at four daily bars. One, two, three, four. So from here, that gives you 4 down days. So this was the low right there, bounced, faded, and then we came all the way back down here to this print. So looking at the year low, year high, upswing, the first swing was 17% to the upside. Now this downswing right there is 7.7 toward this. So this is a zone that I draw here that I'm going to be watching really close, which is we're going to right back to this 400 mark. Um, can Tesla bounce back up from here? It's totally possible. But in order to in order to for Tesla to make a higher high, for a swing to go up, it needs to break this 440 now. Okay. But this is the must hold zone. Okay. We're going to be watching this one really closely. So the positives that I have, what I see is seasonality looks good.
Getting some of the best developers in the country. I've had so many
Okay.
calls.
Hang on.
They want to come in. They don't want anything. They just want to come in and help, and they really know how to get things done.
So then um, this is looking good. Okay. Because I know this thing for a fact that this is not going backwards. Because in the worst case that the momentum can go back. If the stock got hit, if it's gonna take a hit, this rotation is gonna go like this. I can guarantee you that. Okay, and then from there, after several days, it's gonna make its way up. Okay, so right now, this is a positive. Well, we're down 4 days. We're down five here to this low. We rallied this much. So we have this is more as a positive sign, you can see. And we have seasonality. Those three things along with this, if it holds. And if the price is really going to come and press toward this low and we're trying to break this, you're going to crack this low right there. Now we're looking at that 355 print to the downside, which is 38.2% external retracement from 212 low. Okay, so that's the downside risk that we're going to watch. It's a matter of, where is that? Here. So all I'm trying to fight now is, let's go back here. This. So if we go back to the 1 hour time frame, 212. So you got 1, 2, 3, 4, and 5. Okay, good. So we have complete 5 completed waves. So 5 completed waves, we can always expect like, okay, we're gonna have 1, A, B, and C. If this is all of A, B, and C in 2, then we need to go up in 1, down in 2. Here's another 1. Here comes another 2. Now we need this move back to the upside. So we have 1, 2, 1, 2, and then 3, 4, 5 to make that 3. So this is fine. This is a zone that I'm gonna be. I didn't really do much to Tesla because Tesla ended the week with an inside weekly bar. Even the fact that it was down 4 days, but the weekly bar is still an inside bar. So this is good as long as it holds. There's a lot of support here as well. So we have down A, B, and C. It needs to take out this 439 high now. And then we can project that third wave going up. This is the high that we need to take out now. And this is a zone we need to hold for price to make a move. This looks like a ending diagonal to me anyways. So your this kind of a trade, your minimum upside target is always your prior fourth wave, which is 418. So I'm gonna watch, and it's a wild guess. Guess how the earning comes out and how the how he opens up his mouth in a press conference. It's not how the stock trades as soon as they report earnings. It's all about his press conference. That's where he mess up because he doesn't know how to talk. You know, so he's gonna say something, and that's it. And that's where the action, the Tesla will makes the move right at the press conference. So that's the plan. I like this breakout, like meaning that the that 23.56% decline Tesla had, 23.64, I would say. So that we did got out of the channel. We really didn't, we're not inside the channel, we're kind of sitting out, which is good. But I could actually move this thing other way just to kind of make a case here. Because it's cannot, it's hard to connect this because we don't have a third one yet. It's too early to, you can make it on a wave. Yeah, but then you're connecting higher degree to a smaller degree, never gonna work, right? You have to wait for the up for a channel to go to the other direction. It looks good, but it's just we just have to watch next week to see if we can manage to hold the zone, and then to see if we can make a move back about to this four 439. So the upside, I would, well, I don't know where the low is gonna be. If we would do this, the bullish bet on Tesla to the upside would be a 440 to a 470 spread. So that's a 40, 50, 60 cents. That's a 30-point spread from here to here. That'll be the upside bet. Stock turns around. Um, I'm betting on 440 because I'm trying to see if I can take out this high on the way back up. At the only now the worst part that I'm seeing is this. The damn ATR is dropping. That's not gonna work right there. You see? So this is Tesla right there. The swing is up. I'm not worried about that. You see right there? ATR is the ATR is dropping really, really bad. That was only down to only 30 for a week. So if you take this, the week we just had, 30 points. So more and more the stock is gonna stay sideways. ATR is trying to drop. Always does. You just gotta have to remember that. This sideways chop is just, it's painful to trade. And then you trying to see that where I'm gonna time them to make a move for the price to recover. But then you cannot go out here, start buying something, and you don't even have a 1 standard deviation move, and you're trying to structure your trade based on a 2 standard deviation move. Good luck with that. You're gonna get chewed, you're gonna get killed on time. So you gotta watch this. It's very important for you to decide which strike price I should buy and which one I shouldn't be buying by going out because I don't want to pay too much much and the stock is too expensive and premiums are this and that. But it just your probability is so damn low. You don't even have a 10 period standard deviation giving you or showing you that there is a 2 standard deviation move. Why would you even buy something a 2 standard deviation move when you have you only have a 30-point move to the upside just to make it one? Yes, you can get 2 standard deviation move. It happens, but your odds are very low. You need a massive move for a stock to make a 2 standard deviation move. Most of the time, they just make only one, and week is over. Especially with short week when you're losing a day, and those are normally just ends with only one, because you're just losing time. So, well, so we closed the week with the inside week. Last week was the higher week with a higher high. This was an inside week. You see, like it's just 1, 2, 3, 4. That's 1 month price action right there. It's not doing anything. Just sideways. This is not bearish. Yes, the worst case is that it could come back down as well, but that just still gonna make a higher low swing anyway. So I don't like this. To be, I like something like this. A rising ATR is always that's where you have your alpha. That's where you're trying to bet something, slightly out of than you, because you have a higher move, expected move, so you could slightly bet something here, not here. Yeah, pay attention to this is very important.
Mo,
Yeah,
after you're done with Tesla, can you go back to Apple because I have a question?
on
Apple.
this one.
Yeah, I read the chatters on between you and one of the members saying that Apple is going to go down further because Apple tends to go down into March, but in contrary to that conversation, today you are saying that Apple's down for four straight weeks, so getting close to bounce. But so I'm a little bit confused. One side says it's going to go down further into March, and then today I'm hearing Apple is due for bounce. So can you explain that? What is the thesis of Apple is going to go even further from here into March?
I need to watch this first of all. That's the first thing that we watch before we watch any price or volume and things in this. I want to watch momentum. Okay. Can Apple come down more? Answer is yes. If this momentum's starting to get better, improve, yeah, the downside is gonna stop. Okay. So
Yeah, but
this
downside
looks
continue
bad.
into March it's a very long term,
Okay, well, I mean,
downside move. So yeah, I just need a clarification. Because in a
because
March,
you have to look at the relationship as well. If a stock is, if it's such a big stock is taking such of a beating, right? So what happened here last time? Let's compare these two side by side. Apple was down 15.44, 15.65 here, 4 weeks here, 4 weeks here. The decline was the same. It managed to rally 8.7, sold off again for another 9%, made another lower low. So it can bounce and it can sold off again as well. It's totally possible. It's just a matter of like how much of a time the stock will take for the momentum gets better and things like this. But the point is like, well, if you says like, well, I just don't want to touch Apple until March, well, that's kind of, we could only see like how the March. Okay, where's the chart? I bought the here 171. That was in April of last year. Okay, so that was the entry, and I still have these, I still have these shares. I know I'm giving back. It's okay. I gave back 17 here as well. I didn't panic. Don't worry about that. So I'm planning to buy a leap on Apple. I'll hold those shares, or either I'm gonna just try to, um, you know, put another spread or something. You know, we can do it many different ways. But if you just go back and pay attention to these, how similar, like, can it come down another 2%, 3%? Yes. But it'll improve. If Apple can get a bit of a bounce like this, the question after that, can that bounce can get sold off again or not?
So
Because
I think that
if
I
you
think you were
look,
talking about how Apple behaved in 2022 and 2024 in the first quarter, I
okay, here,
think.
I'll show you that way. It's going to give you a much better idea. There you go. Now you look at this way. You can do this way. This is the year that we're in right now, 2025. That's 24 low to 25, 24 high. That's peak to trough. Here's your 23 to 23 right there. That's the whole year. So let's clear all this from here. Okay. Get rid of this everything. I don't need it. Make this a little bit small. Here. So now look at Apple every single year, how it trades. Let's look at a blank chart. These are exact high and lows of 1, 2, 3 years. You want to go back, we can go back as well. It really doesn't matter. 2, 3 years is more than enough for you to analyze a price on a chart on a big stock like this. You don't need 5, 6, 7, 8 years of a price data to trade a stock. You're just wasting your time. Here's your 2022. We just looked at them, 29% down. Went all the way down up here, down in 29%. That was the 2022. That was a bear market. S&P was in. So we did 30 here, rallied up, 27 down 30. So it was just like a round trip. From here, Apple rallied all the way back up here to 2023. So here's 24 last year. So what Apple did last year was down 17%. So okay, so Apple was down 17% until April 19. That's where they put the low in. And that low, and then Apple rallied back up. Then we had another dip here, but then how much was the upside for the Apple from there? 44%. So you're down 17, you rallied 44 last year. Now we're starting off this year, not from the top because the year high is here. Whoops. So we just calculate just the time. We're down only 13. But from the top, we're down 15 something. Okay. So if we take time, how long does it take for Apple to go? Nobody's gonna pick a perfect bottom. Okay. I can bring you really close to it, but 18 weeks. Okay, that was 18 weeks for, well, it has several bounces as well, but it just keeps it, inside day here, then it kind of sold off and it just, but you just look at the overall decline, how much it was. It was 17, it lasted 18 weeks for to put a low in, and then Apple from there rallied 44%. Right now, it did the same exact thing like last year, starting off weak. We can see it on the RRG, and now it's weakening down 13%. Okay, now the question is, now the earnings are coming. Can Apple can make a low here, bit more, and then it can make a move back up? That sold off. That, but the 4 weeks compared to 18, we still got plenty of time to go, right? So we just now the question is that how often Apple is down for 4 down weeks as well. It was down here 4 weeks. We just looked at them. So now you compare this one to this 4 weeks here. They're side by side are exactly the same thing. Sorry, this not the high. This decline. It's pretty similar. Here, you got 1, 2, 3, 4 bars. I'm gonna go here. This. Okay. 8.7 for 2 weeks. That's 4 weeks. 11.7. That's 4 weeks. 13.46. I mean, you close. I mean, you're talking another 2, 3 points compared to this decline. So I'm not saying that it's gonna rally up another 8.7. I mean, it just the point is like you're trying to compare side by side relationship. That's what you call bar to bar relationship. And you measure a time that can give you an idea. I mean, the point is like, can it come down to 215? Can it come down to 216? Yes, it can. What I am looking at, okay, Apple is trying to settle into the second swing of this weekly 1-2 swing. Is Apple's gonna make a third swing to the upside? Yes, it will. I'm watching. It's not really settled yet. It will be soon. It's showing a 216 print to me right now, but I mean, I'm just not laying it out there yet because I'm watching. There's nothing bearish about this chart. Apple's gonna announce a buyback, so I'm gonna rip right back up. This is it just did the same thing here last year, weaker start, and then Apple rallied back up. The only thing was here, you see like Apple was up here pretty strong. You see 1, 2, 3, 4, 5, 6, 7. So from November 15 all the way until December 27, Apple was making higher highs every single week. See how it took off? 3 to 6 or 7 weeks. Why it went this way is because of this. Because, see, where is that? Okay. Because of this. You see how sideways it was, Apple? You can see a chart. I mean, you have a price is literally doing nothing. You don't see a difference in a price of a chart that something that resume like this to the upside. We talk about this all the time here. Hey, you have a price that rallies. That's your accumulation right there. That's your distribution phase. That rallies back up again. It's the same way it works to the downside. That's how the trend works every single time. Depends how every chart that you look at is going to have this structure. Just look at a blank chart. Any chart that I show you, I can show you on a chart. Let's say, I don't know. Give me a stock ticker. Something has a good well, we haven't. Okay, we can do NVIDIA. What NVIDIA is doing here? Nothing. I mean, okay, let's go back here. Let's start from here. Okay. Rallied. See? This is what I'm talking about. You should have that, I believe, on your Thinkorswim is called accumulation and distribution phase. There you go. It does help. You see right there, accumulation and distribution. It's better on a weekly time frame. You see, like a stock is just it's very range bound. And I have a wave count that I'll show you that I did it here. So a NVIDIA, I had them as a triangle here, then one, then two. It just I didn't trade NVIDIA this week, as you all know. And it's just is I don't know what's going on here. This is not easy to trade with options. It is not. We took a trade on NVIDIA last time. Remember, I had to go 2 times into this trade. It's just to make money on that trade. And I'm not a very big fan of adding risk to the trade. If it doesn't go my way, I'm fine. I'll find something else. I'm just not gonna force capital over on a same just to fight that position back. I'm just risking more. If just if I'm running out of time, let it be. I'll find something else. But I'm just not gonna press too much capital on a certain position that I really want the position to kind of turn around because I move my average down. It's just a dangerous way to trade. If you're wrong, you're wrong, and not the end of the world. You're not gonna die. Find something else. It's not. There's always another trade. But some people take losses so damn personal. They're just like, well, I'm not making money because other guy is making money. Your turn will come. Okay, it will come. Nobody makes money every single day. It never happens. Never will. It just is. It's very range bound. Very hard to strong company, yes, we get that. Apple is NVIDIA is the poster child. We get that. But I mean, we have a double top here, okay, to this 152 mark. Is that double top is gonna get taken out one day? Yes. And now it's just a matter of like, can we bet something like this for this top to break? Or does it give another false break lower to the downside from here? Because this is exactly what it's been doing. We got in here somewhere, remember? And then we came back, dipped. Then I added something here. I mean, it was 2 trades we did, but it was last month. But it worked out. But you think this is easy? You have a double top here. You come all the way back down here. Now you're going all the way back up here, and you just backed off yesterday. This is not easy to trade. Okay, this is just a pure roller coaster. You come all the way down, all the way come down, and then you go all the way back up. It's very, very hard to trade with options. Shares, yeah, that's fine. Play the whipsaws. I don't care. You got, you know, you got all the time in the world. You have nothing to worry about. You can wait if you have shares. But when it comes to options, because this is where you have the time that you're trying to fight, this right there is just not gonna help. You're trying to play a breakout. It's just how many people here that just got hurt. They just pulled the rug. Because you're trying to take this high out. Price should make a move higher, right? Because what is the bullish trend? Higher highs, higher lows, right? That's your higher low, higher high, higher low. That's your bull trend. A basic 101. There's no other bull trend trades like this. But your retracement has to stay above the prior retracement. This is the only way you're going to have a valid higher low. If your retracement fell below the previous swing low, swing is wrong. The trend is going to change. It's a simple swing trading. There's no rocket science to it, but it's just you learn Elliott, the swing trading is going to become really easy for you. So can we do this? Can we make a case for this? Yes, it's possible. Maybe we can do. So we have a one here, down into, up in one, down in two, and we're looking for a third breakout on NVIDIA. Well, is it possible? It can be. So now we need to find something like this we can do. So now this invalidation is going to go here. Now we're going to fight this two, draw a zone here to see like, okay, where it could find a potential support. I would go from here because there's an overlap. I don't even know what kind of funky looking correction is this. So damn choppy. Here, so you can have at least 1, 2, 3, 4, 5 up in one. There's your down in two. See if NVIDIA can find something here. There's your invalidation, goes right here. You don't want to have this second. I would even move it a little bit up here. You're going to crack this 7, 8.6. You're done. But the point is here that you're just trading a chop. That's why I didn't trade NVIDIA yet. I'm watching. I was like, let's watch this. See, what is that? 140, 142 is coming close to this 140, 140. Sorry, 141 to this 38.2. Again, 140, 145, 145 back to 140, 145 down to 135. 135 goes back to 140. That's exactly what it is here. It's a 5-point range. Is we talked about it last week as well. Why is that? It's because of the 5-point ATR. Where is that? Here. You see what's going on here? Now it's actually down to 3.4. Oh my God. This is even worse. Wow. It's just I'm not dying to trade this kind of a price action. I'm just not. I'll find something else. I'm just not. It's this is crazy. So from 137, where's the close at? 142.62 minus 137.09. 5.53. This when you have this is crazy. This I don't know. This price action is very difficult to trade. And you can see um, what are we doing here. So we have a higher bar here. A week before we have a lower bar. Then we have a huge bar here. Outside bar, higher bar, lower. You see like you have one, two, three, four, five weekly bars, except for one of these. And then you go all the way back up, put a double top here. Okay. Now you look at the high here, 153.13, 152.8. That's a double top right there. It's just, and then you take this and you draw this one here. So what do you see here? It's just a back and forth range. You got a false break here to the downside compared to this low, right? But look where it closes. So you just had a big wick. Made all the way bend back up to make a double top, and then you reject all the way back and made another another false break below this print, but you managed to stay above this low. You don't go back this far. You always compare to the previous low. And then it managed to make. But the point is here, first is this. Second is this. It's just not something I'm dying to trade, something like this. Nvidia can wait. It's not going anywhere. You can make a spread for any strike higher as well. I mean, this 145.5 point spread on Nvidia, you can make them all day long. You can do 145, 150 spread, 150, 155 spread, 135, 140 spread. You just keep moving the spread in a 5 point range over and over again. That's it. You only have three and a half, close to 4% one standard deviation move anyways. If you can get two, you got lucky. That's it. There's nothing else to it because this has been sideways. I think it's just going to stay sideways until it's going to report earnings. That's how I see it. I don't see anything rising here anytime soon. It's starting to, but look, this one just completely went flat. Look at the third week. You got a little bit of a lift here at this bar. And on this one right there, look how much of the upside from here. Then, just it moved, yeah, but that's why it failed at the top. Yeah, NVIDIA is very range bound. Very range bound. What I was gonna show you. Tesla did it. MSTR. This guy needs to stop with these convertible bonds. It's getting really, really annoying, to be honest. He's killing his own stock. The stock is just not moving because he's keep trying to adjust his cost. So that's the pressure that he's putting on his own stock. I don't know what kind of a well, we all know who he is. We all know how he's trying to play the game. He's trying to protect his downside, which I get that. Okay. And he's trying to make double as much if the stock is gonna go up. But but the stock is really not doing much, and he just keep buying. You know, if you look at a Bitcoin's sitting in a triangle right now. Okay. So yes, I mean, a Bitcoin moves, but a coin and MSTR is not really responding to a Bitcoin strength, if you notice that. They're just not. Bitcoin went up to 108, okay? That didn't move back to 500. It barely making it to that 400 point range and it just backs off. Came back up here to 381, backs off. Made an attempt all the way back to 406, backed off again, you know? So the Bitcoin promise that is going to the moon or whatever, yeah, if you trade the Bitcoin itself, that's a different thing. If you had them on a Coinbase or whatever. But trading a stock, then on top of it, he's coming every other week or so because he's issuing more convertible bond. Now he has that debt. Now keep in mind the convertible bond has a maturity date as well. They're gonna mature at one point. I don't know what's gonna happen to the stock that time. I have no idea. I don't know how but the more and more that he's buying, but he's trying to buy low as possible as well, right? He's not gonna buy something here. So he's trying to buy some, that if then he's trying to adjust his cost. So for these kind of a millions and millions of worth of dollar orders are gonna go and you're gonna throw them at the market at the stock. Well, the stock is not, is gonna try to adjust that cost. That's what he's trying to do. So I don't know. Whatever the case is, I'm bullish. There's nothing bearish here anyway. So um it's starting to look like we can kind of, I'm watching. I cannot call this thing yet because we have to kind of like, I mean, you can kind of like think like it could be a possibility um to make a case like this. And let me see. So you can't, oh boy, what happened here? So you can make a case like this, but I'm not gonna do anything yet, but this really doesn't make a difference. What we could do is, so we had this channel, we managed to come out, got rejected. Good thing that it came all the way back down to 78.6. It held, as you can see, almost to the penny. And then from here, it made a way move back up. And now we can do 1, 2, 1, 2. This is a pretty damn aggressive wave count now if it's gonna go. You're looking at 1, 2, 1, 2 to 3 of a 3, I mean, this is a very, very aggressive count. But if it holds and Bitcoin, I mean, can make a move out of the, which most likely it will, from a post triangle, if it can make the post triangle thrust. I think I don't know if I was showing that thing yesterday that Bitcoin is not doing anything. This yesterday. uh, Very here. You see, Bitcoin just not, this is the futures, just not doing anything. It's literally sideways. So it's trying to kind of poke above this line. If this is a triangle, I mean, you have one more push coming. What's called the post triangle thrust. So need to break this high. So the post triangle, I mean, there's nothing bearish here. It's just a matter of the triangle, as we all know, it's gonna take a lot of time. You see how many whipsaws up, down, up, down, up. It's just, symmetrical triangles are nasty. Take forever to complete. So if it plays out, I mean, Bitcoin should make a push to the upside would be ideal. If that's the case, and if this MSTR, if this guy is gonna stop his his queued sales that he's buying nonstop, I mean, some people are calling he's a fraud. I don't think he can do that long of a fraud. I mean, he's gonna get caught. But at the same time, like he's out there with Trump, with Eric Trump, and taking pictures with everybody possible that he can, trying to sell everyone on a Bitcoin that invest in MSTR is the way to go. Um, so we'll see what happens. We're gonna watch. Um, where are we at? 50% at 350. 3-year high was 333, as you all know. Last entry we picked here at 286. That was the last entry we got. On the shares, my exact average entry now on the stock portfolio that we have is 334. So we're just sitting there at 344, which is exactly a 3-year high. So we still got room. So we'll see what happens. We're just gonna watch this. Take this low to this low. So 285, 303, draw the trend line if these lines work that well. And then to kind of see if it could find if we can hold 350, then worst case 338, which is 661.8. So there's still a potential here for stock to find some support here, and then it needs to break this 404. That would be to take out this high. Then from there, we're going to start projecting to the upside. So there's nothing much to do here. We just has to wait, watch this zone, watch 404. If it something holds here, and we can actually take a shot here with the, I can do a, uh, we can make a spread something. We can do a diagonal spread, like a little bit more bullish, a little bit more delta to it, just to cut the time, kind of a bit more directional trade. We can do a butterfly as well. Butterfly is going to be tough to fill on all three because stock moves too much. And do a simple spread and do that. I don't know what the 50-point spread is going to cost. I have to look at the chain. I'll see. It looks like. So you could be on play a bounce or something. It's been a while I traded I'm just married to these shares. It's been a while I traded a MSTR with options. Yeah, we'll see. Um, Qs didn't even made a new high yet. Remember if you look at this, or everybody married to this, look at side by side. So you got new all-time high on the index. Q didn't even took out the 539 yet. It's still sitting around this 78.6. So see how clean this wave count looks now? This was a bit of a challenge to label. And Yeah, coin. Yeah, coin is. There are two prints you gotta watch. MSTR at 400 and coin at 300. These two prints is that every time when the price gets close to them, these coin and MSTR just backs off. You know let me show you. The rotation is good. Remember, I have this screen here. This Apple. Apple's not. Don't worry about Apple. Apple's not a stock. It's a treasury bond. Always remember that. Here, the rotation is good. Okay. Um, what are these clouds? I'm playing with these clouds lately. I had them up there. So they're like, I hope. What is this? I hope we go. We need to go up. MSTR needs to hold this too low, man. It's gonna be a problem. If this comes down like this, it's gonna become a fail swing. I will tell you that for it from a daily. You gotta watch this one really good. Okay. So whatever risk that you're holding and whatever the plan that you're trying to do, whatever that you're trying to do, you need to make sure this low and this low holds. Just 240 here and 384 here. Why this thing becomes so big? Okay. 340, no, yeah, 385, whatever. Here. This swing right there, meaning that you have, this is a air low. You need a higher high on a swing now. If this swing failed and take out this swing low, this is going to become a fail swing. Remember that. This is going to become one. And this is going to accelerate. It's going to break. Once you take out this swing low here, then it's going to make some room to the downside. Pressure is going to come. That's going to be one. Then you got another swing two. Then you got another swing three. Well, who knows what kind of a time that thing is going to take. Then you need a higher high swing to turn the swing back up. So it's kind of a little tricky right now. This is what I'm saying. This guy needs to stop what he's doing. Let the stock move. But he's keep adjusting his cost with these bonds that he's buying left and right because he's trying to protect his downside. He has much bigger return if the stock is going to move up higher, but then if the stock goes like this, well then he's not gonna make that much. That's why I don't know. To me, what it looks like that um, he's too scared with the risk that he took, that he's just trying to protect the downside. That's all it is. You see right there on coin, I mean, still got a long way to go down here, but this has to move. But this is already settled. This is done. This is done. Now this third has to go up. Same thing here. Needs to take. So the point is, third swing must exceed above the previous swing high. If it fails, it becomes a fail swing and then the swing turns down. So remember that. So, what can happen can happen. I don't know that. The rotation is good. Okay. Bitcoin is good. You see? All in a third swing now. But Bitcoin has to move now. Bitcoin is good. Bitcoin already made a new high. These two didn't. You notice that, you see? So worst case, takes a leg lower, and we could can make a move back up like this as well. It's totally anything is possible. As many times I've seen something this happens that you becomes a failed swing, you come back down. So this is basically becomes because you're gonna take a serious hit on a market cap as well. So you just take one swing here, that's your two. Same thing looking at ABC. You just measure this move, project it from here, look for a measurement to a 100% relationship, and then we're gonna buy, you know? And then from here, we can just look for a swing to reverse his course back up. We just look at a simple ABC move. So that is possible as well, like something like this, and then starting to move back up like this. Well, I don't know. I don't know what you can draw anything on a blank chart means nothing. It means nothing. Yeah, you can only analyze what you see. That's what I always say, trade what you see, not what you think. You can think anything you want here. Doesn't mean anything. Tell your friends, your neighbors, your cousins, your brothers, sister, whatever. Doesn't mean nothing. You don't know anything. No, neither do I. Yeah, I can only see this, and so do you. So it's good. I mean, rotation is good. This looks good. This looks nice. But that's what I'm saying. This post triangle, this should break. Yeah. Well, Bitcoin is pretty damn good. This thing right there, it's a perfect triangle. If it holds, it should make a move up higher. So the next leg up on Bitcoin is 113 mark. So mark that level. And once we get to the 113, then we'll open up more upside. I'm not gonna entertain that much upside. If this triangle breaks, looks like it will. I mean, RRG looks pretty good. If it breaks, the swing is up. Okay. Your upside is 113. Once we get here, then I'll take a look. Then we'll see how it looks, and then we can look more upside. This is gonna become the support anyways, because right now the Bitcoin has a double top. See how funny kind of like pricing starting to look like double tops, everywhere you're starting to see so many of them are just backing off. Um, it's gonna, you have two tops, it's gonna get taken out at one point. We don't have it here. Bitcoin does. The point is this, right? Now pay attention to this. So you have second swing on a Bitcoin, right? Down here. That's the second, that's the second. Now you have to look at this way. Bitcoin ended up making a new high, as you can see that. These two didn't. So this is what I was trying to tell you this, that these side-by-side correlations that everybody thinking like, oh yeah, the Bitcoin is up and it's going to rip the coin and MSTR to the upside. Yeah, they move 15, 18, 16 points or whatever, and it just backs off. So if you try to compare like, okay, well, I could compare swings. You can see it as well. They're all 1-2, right? But at the same time, you have Bitcoin is making new highs. This one is not. Neither this and this one. So these two are holding hands. This one is running by itself. So at this point, you see like it's it's exactly the same price on both sides. So you have a one which is roughly like 100 point cheaper than this one, to buy. But it's the same. I mean, where did it talk about 353? This one goes at what, 300? So it's a 50 point, roughly 50 points cost difference between these two. As a matter of fact, let me check one thing. I'm just gonna do this. Let me do a side by side the comparison. So we could do, no, that's gonna be too much. You see, they're like year to date. So you're not gonna see much because it's not that much time. We just started off the year. Let's do last year. So if you do a last year, you can clearly see that betting on MSTR compared to the coin, you have a much better alpha, okay, you have on the MSTR compared to the coin. The reason why this one is showing much wider and bigger spread, because remember the stock used to trade 10 times more money as well. Now it got split. So for the cost wise, right? So you could make the same case for this move compared to this run here on coin as well. But this one will definitely pay because you're looking at a stock used to be $1,000 or so, 1,400 bucks for stock for something here that was trading around like what 50 bucks down to like 300 bucks, $350. So there's not really a comparison, but but now you could compare, but it's not really gonna show much because the time lapse, because the stock split, it's MSTR. So it's gonna, instead of going back that many years because of the price difference, you just go year to date for now, because now they're both here. So when you look at them, is where they start the year from here. Now, if you look at these two stocks side by side, you definitely get more alpha compared trading the MSTR over coin. Because this one, you see how it trails above this one. So when you trying to compare to, so this is what you can do, a relative comparison between two stocks side by side to see their strength. What would be the better bet for you if you want to play the upside? MSTR. What will be your better bet to the downside for you to play? MSTR. Because you're going to get you're going to get a bigger move. Bigger the move is, bigger the payout is. So you always want to bet something that you could get alpha out of the trade, on that trade. It doesn't mean the coin is not going to move, but it's going to move on a much faster pace. So the difference between what you have here, that's your spread. Between two, the gap right there, you see how big the spread. Sometimes you do stock spikes more. You see right there, and this one really didn't move much. It's kind of going sideways. Now it's coming close. Now they're trying to hug each other. So very, very close. So betting on MSTR is always your first bet, first choice over coin. But then if you wanted to sit and because I don't want to. It's the difference is only 50 points, the cost wise. You have 350 versus $300 stock. A little bit less cheaper premium on coin compared to MSTR. That's your only break. But you could try to always adjust them with the spread anyway. So yeah, that's your if I would do see, let me see how the I was gonna do this thing earlier. So that's your Apple. Because I know they follow. Yeah, you see, Apple is way disconnected this year. Apple is way down. This for many, many years, I've noticed that these three charts, like when I used to make a wave, like when I do the wave count, they always mirror each other. Apple and Microsoft were the completely pretty much identical charts for so many years. So does the Qs because they're the top leaders. And Nvidia came along and it's starting to come in between. Now, if I put Nvidia here, check their relative strength. We're close to it because it's chopping. It's chopping around. Now, if you go back to last year, see, Nvidia was the leader. Nvidia outperformed Q's, Apple, and Microsoft. So now, if you go back to 5 years, look at that Nvidia. Yeah, I mean, as always, your best trade there. Comparing well has a much bigger return as well compared to Apple and Microsoft. You know, so you have a stock that rallied almost 180% last year. Think about it. That's crazy. It's the yeah, 171%. A year before was 238%. 2022 was 50, then 120. This is a triple digit returns. This year, this year, this year, this year. We started off at 6.5. 3 year, 82%, 86. It's crazy growth. It's insane. If you really look on side by side, you can look into Tesla, dead money. Look at Apple and Microsoft. Kind of similar. The 3 year average, pretty close to it. They're just more steady stocks. They're the top leaders. Worst case, I mean, 1, 2, 3, 4, 5, 6. This is the seventh year, right? So let's just look at them in the last 7 years. Okay. The biggest downside for the last 70 for these two stocks was 28 and 28 to 20, 26 and 28% here, which was the 2022 was a bear market. And then next year, there was the same stock went double. So what does that tell you? I think 10%, 15%, 20% is a good area to buy the weakness on these stocks. You know? Keep in mind, Dow 30 stocks, okay, don't come down more than 30%. Remember that. Okay? They don't. If you have a Dow 30 stock that is down over 30% for year to date for over a year or so, they're just gonna kick the stock out. I can I we can do that if you wanted to, just to kind of see. Yeah, those Dow 30s are, come on. We can do Dow 30. I have 30. Oh, what already here. Maybe a little bit bigger. That's a European. Where's the list of Dow 30? 50. That's a Russell top 50. Transport, Russell, Microsoft. Kind of weird. Yeah, you can do top 50 is gonna cover all of them. Your 50 top 50 stocks. There you go. That's your top 50 companies. Look at the performance side by side. You look at the exact performance. Which stock is doing good in the next 3 years on average. There you go. Yeah, Broadcom, it's because it's split. It's not right. So skip that. So let's look at the leaders. Here, NVIDIA, Eli Lilly. So if you look at something, your, well, 2022, everything pretty much got hit. So that was just the worst. But then you just have to look at after year, which stock has done well. Salesforce is flat, down 27. Apple is down 11. Last year was up 34. 14. AbbVie is, I like this company. It's kind of not, it works with healthcare. It's just so damn tough to put a bet on healthcare. Look at United Healthcare. 5 was down last, it was flat. It's just not doing anything. 1, 2, 3, well, with Biden, healthcare, now I don't know, with Trump. Yeah, Home Depot is another laggard because of the high rate, it's all people not, whatever. It's another one. 12% gain for last year. Yeah, Big Mac was flat. Big Mac is not doing anything either. I'm trying to see if I can get a bit of a pop. Didn't really do anything last year. Accenture was flat. This is the one. She ran after Nvidia, signed up a partnership. No, AMD, horrible. Look at AMD. Look at this. This is the worst pig. Worst. It's horrible. And she was the CEO of the year last year. But this right there made her a CEO of the year last year. This stock already has a yearly lower bar as well. It has a yearly lower bar. This stock is done. I'm not touching AMD. Hell no. Garbage company. There's nothing there in AMD. I don't like that chart. I don't like the price. 88, 80 price, I will consider something, but nothing here. Bank of America is good. Qualcomm. See? Where's all the AI? These stocks are just. This is another one. Well, this is bad. This is horrible for this company. Well, Johnson Johnson sales are all down. PDD's locked up. Nobody's buying the oil. They just they're struggling. They're it's just this is bad. Look at this. This is a Dow 30 stock. So if we buy something here, what do you think we can expect an upside? 2-3% just to at least like we need at least what? This stock needs to move up over 10% or so in order to even turn positive for the last 3 years of average. 5 years is flat. This is dead money right there in this stock. When you study data, you can really make good choice. Like you can make a lot out of from the data as well alone. You know, just to look at their performance, how their stock is doing. That's why I have everything that's scripted here, because I look at them when I buy something for some time. Look at Adobe. Look at last year. Look at 3 years. It's terrible. This is a great company. The CEO has to go. There's another one, Mickey Mouse. 6.5, 4.5. This is another company. 100-year-old company, failed business. This is horrible for a 100-year-old company to perform like this. They have this, they have streaming, they have this and that. They have not. They just reinvest everything. They have nothing to make. The only money they make is on these theme parks when they rip people off. Disney makes no money. Overpriced theme parks. That's where they make their revenue. That's where the revenues come from. Comcast, dead. Verizon, dead. Pfizer, dead. Not Broadcom because it's not adjusted yet. I need to figure out from. This is all dead stocks from here to here. I will stop somewhere on the close to McDonald rate. This is all dead stocks. Okay. Cisco kind of close to Cisco fine. Accenture. I will start from here. This Accenture, AMD, Bank of America is okay. 3-year average still sucks. Texas flat. Coke, Qualcomm is okay. Not really. These stocks, I would not touch these stocks. The performance is just not for me to. I'll play the top part. Where's um Tesla right there? So that's Tesla right here. See, it was up 62 year before 101, down 65, 49, 7. That's the COVID time, whatever. 25, but you see there, It's a good trading stock. It's just, and you cannot holding a stock. It just it's not that big of a payout there. You know, it's a good trading stock. That's all. Keep betting on up and down moves on Tesla. It's too much noise on this stuff. So if I put money in S&P that pays me 10% return, I mean, I'm still better off putting money in the S&P over a Tesla, don't you think so? I could still pay me a better return than a Tesla. Then I gotta suffer all the volatility and everything for this stock to just rip and move up and down. But again, wouldn't it be fine? Hold the shares. That's the only way that I see Tesla to play. Buy shares, stay long, keep trading spreads, and you just average it out over the year. That's it. That's the only way you're going to make money on this stock. This is not a stock that you're going to just play one side just to say, like, well, I just want to buy options or I want to sell options. No. You hold the shares, buy some shares, leave them, and then just keep trading option trades all year. Then you will just average it out. It's a very, it bounced around a lot, and it's always about Tesla, 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 Tesla. Like, um, well, hang on, this guy, oops, this guy sent a message. Wants to look at MSTR, we already did. NVIDIA, we already went through. He wants to look at that. Broadcom, we did look at it last week. I don't look at this. I mean, last week we left it here thinking about we're gonna make a triangulation here. It looks like it didn't happen. So we're gonna move something here and kind of little, yeah, it's okay. It'll work. And then we're gonna try to see if we can get this push up in 5. So your wave 4 kind of falls right in between all the. If I put a 4 here, that was excellent retracement. But then here we just kind of gooping around. So we can do this. So from here, we can do, oops, oh boy, 5 versus 1 comes right at that 251. That's almost close. And then we'll do this for now. Leave it like this. To break above that 251 is to see it can make a move to 260, 261 and 274. Sorry. So we can do this. I really wanna, it's not gonna fit. Yeah, we can do something like this is fine. But it really doesn't matter. So what you have to look for is this. If you get the break above the 251.88 print, you need to take out this high right there. Once you take out that high, then you know that 127 is the is the one that you're going to go target. And then 274 is 161.8. So if that's the case, and then where would you put what's your downside risk? You can just use that one, 225, 78.6. So you can do that. So you have what I see here is this. Remember we just talked about this? Where would you bet? This way? Or would you bet this way? Have you ever seen a trend that goes like this? Doesn't happen that often. So basically, you're talking about going up in 5, stay down in 2, right? So what is this? So what are we looking after that? We're looking at another 5 up, right? But you're willing to bet as this. So you're basically talking about 5 up, stays down like this, then another 5 down. So in better way to draw this would be like this, okay? Stay sideways like this. Where do you see that kind of a stuff on lot? I want to see it on those charts. I mean, it doesn't happen that often. It can something, but it would be just a much deeper correction. But as long as the low holds, then stock can always make a rebound back up. So the point is like if you look at the S&P 500 cash, okay? S&P 500, when you have a clean 5 waves up, if you can show me this on S&P 500 cash index, okay, I'll give you a credit in the world that you deserve. Show me something like this. I want to see. You have a clear 5 waves up on a 1 hour chart, on a 195-minute chart, or a daily time frame, and you have a straight 5 wave decline to the downside. I like to see that. Market never trades this way. So for him, I know he's traveling. So um, it's just a sideways range here, basically. So we can try to play this breakout. Bet a 250, 260 spread. You know, we can do that. See if we can just kind of break this top. I mean, if we fail, we'll just go sideways even more. It's very hard to time a sideways chop unless you break this, you know? Like, then you have um, like Nvidia. We just looked at them. Remember, you had sideways. You have a high, then you have a long sideways chop. Then you end up making a double top, and then you got the rug pull. So that happens as well. Um, you never know. I know that tractor just hurts. I swear to God, looking at that tractor just hurts. I should have never closed that. It was a profitable trade. I was just should have just hold that other half. I did 2 trades. Look at this thing. Oh my God. I looked at it the other day as well. I was like, what the hell did I do? It's just crazy rebound from that 78.6. This is exactly what I bought the second spread, you know? And I got out of here, somewhere around here. This thing is just a nonstop.
Yeah,
So
industrial stocks are very strong. It's not only Deere, Cat,
I know.
GE,
Yeah.
everything. It was like, they made a parabolic move.
Yeah, I know, Kira. The industrial stocks are definitely, it was a very, I mean, it, trade is a trade. I mean, it did it was a stock that I was really interested in getting, and then I was like, I got in here, and then I'm just like took all this punishment. I was like, what the heck is going on? Like nonstop bleeding, you know? I was like, okay, I'm just gonna keep extending this channel. Got few promising breakouts like here, failed, then back again. I kept this channel the way it is. So you don't want to move. You never want to move a channel. Leave the way it is. Price will come back inside one way or another. And then here we got this final breakout. So I was like, okay, it's gonna hold 50, it's gonna hold 61, it's gonna hold, that finally it ended up holding the 78.6. And look at that print. The low was 403.01, 43.31. How can you beat that? Look at this upside from there. It's crazy. It's okay. That's that's what you call a bottom right there. Well, upside here is 100% is 488. I mean, what, 470. There's 10 points left from here. This is some serious fibs are coming here for this thing to take a bit of a break. You got 161.8, 127.2, and you have 100% here as well. So this stack right there is gonna it's gonna put a bit of a pause. So now
So
this
re-enter in wave four. There's so much upside.
there is the one that you have your support is gonna be at 470. Okay, because of this high. So this high, that's where you took this leg down. So your support is with your prior resistance will act as a support on the way down. So if this is, I don't know where this four is going to settle, but I'll take another shot at it somewhere around here, like in this zone. For this four to settle somewhere around here, stock just already has such a huge run now, so always difficult to chase a running trade. I was in there, come on, I was in there, and then I mean, again, for me, we didn't lose money. We made money, but we could have made a lot more money being in this. This is almost maxing out those spreads, almost, you know. But it's okay. Find another one. Um, no, I'm not gonna. You want me to add all of that junk into a mag? No, I like to mag seven the way it is. I don't want to add any more any more financials and stuff. I can show you by sectors. Yeah, I don't want to. I like to just keep because those are the movers, on a daily basis that we're always going to be watching and talking about Mag 7. It's much rather to just keep their rotation only with Mag 7, and then you can put an ETF in there, which is the MAGs, is the ETF. So, which is this Round Hill Magnificent 7 ETF. You can even buy this if if you really want to, bullish on all these Mag 7. So you can just looking pretty like from kind of around here, something here. So let me see. Okay. So we got a high here, we got a low here. Looks definitely that same S&P choppy back and forth zigzag. this. A lot of earnings are coming. $56 right now. So what is the high here? 58, 53. So we could draw our fibs from here to here. Now watch this 57. That's the high to 60. So consider an ETF if you want to. Mag 7 tracks all the Mag 7 stocks anyway. So what I was gonna oh,
Yeah, but
it's
more
easy
when I say
to
that
huh?
when I say that, can you look into more financials and industrials? I'm not talking about the junk stocks in those sectors. For example, like a Goldman Sachs have a 3 times higher ATL than Nvidia, and you occasionally will trade here, but I think that we are missing out some opportunities if we just completely ignore financials, for example.
Financials. Okay, let's look at this. Let me show you how I find stocks, what I look for stocks. Okay, first we look at the sector. Okay, what happens is done is done. So we're gonna have to focus on what we could look for as a next opportunity. So all day when I'm sitting, looking, analyzing the market, this is the first thing that I go after is the first to look at the sector. Which sector is the one that we see is willing to make a move up, X and Y. So we could do name and code, right? So this is the rotation right there that I will consider. And then we have communication along with technology. These are the only three. And then we have consumer staples, which is down here. So there's only four sectors. They're still in a lagging quadrant, looking to make a move back up toward the improving quadrant. So the ones here, which has already made a move, which is the real estate, and we played that AMT, as you guys know. We played that trade, and then financials are here. Get out of that after earnings. Healthcare is taking another dive lower. Utilities up here. Industrials are here. Industrials is definitely strong. I get that. I see it. Well, this is what it is. Um, so this was I was I was betting on that thing with the John Deere, but I decided to cut the trade. But what it is, what it is. I'm not gonna cry over it. Materials are up here on the top. So so the sectors that I wouldn't worried about those two. All the other ones, I would be interested in focusing on these three. Okay. So we're gonna focus on these three. So now put this thing down here. Now, these stocks right there are the top 10 largest holdings of each sector. Okay. So you take all these 11 sectors, narrow it down with the market cap, is going to show you only the top 10, not the 11, 12, 13 ranking, only the top 10. So when you're going to go to utilities, these are the only companies right there that is in utilities has the top, these are top 10 companies. Okay. Transportation, only Union Pacific. Here's your technology in services. So in the technology services, we have Electronic Arts is the worst one. Okay, taking the biggest dive. It rejected basically. It was up here. It just made a. Oracle is the strongest one. We already saw the Oracle move. You know, Salesforce. I'm watching. I'm very interested taking a shot at Salesforce. Netflix just had their earnings. Microsoft is making its way up. Accenture is flat. Take Two is nah. Meta is making a move back up because of the earnings are coming up. Google is kind of Google did end up making a new high, but you know, be Google is something that I'm watching as well. These are all I watch on a daily basis. So Adobe looks starting to look good, but if you focus on these stocks, so this is a daily rotation that I look at, then I look at the weekly rotation. Adobe's bad. It's war, you know, it's not ready yet. So it's gonna take some time, but daily rotation is still much. Is you know, it's plenty of time for swing trading. So we go to technology, bring that thing down now. So we have Oracle move already done, got a big pop to the upside. Microsoft move to the upside. Meta, Google, Electronic Arts, this one's taking a huge dive lower. Look at the size of this bar. Holy moly. Huge. 115. Whoa. This stock was down 3 6 for already for 6 weeks in a row. And this took it another dive lower. It's just down 31.6. I don't even know when the last time I even owned this. This is the one I'm interested in, is in the Salesforce. I was gonna the Salesforce has been taking a beating for 6 weeks in a row. If you notice it here, look at this. 1, 2, 3, 4, 5, 6 weeks in a row. We just keep making lower lows. Down 15% is trying to make a move. Like what this week just moved, I don't know, 12 point ATR. I don't remember last time I even traded this. Here we got Adobe. Adobe is, it made a 9.4% move, but it's such a narrow range. Look at the last year before, 437, 432. Like I always look at the high and lows first, you know, just to kind of see how the stock is trading for like the last couple days. It just, yeah, it had a pretty, I mean, it made a bit of a move. Nothing strong. ACN is, I know, this side, it's gonna break. It's just gonna break. You see, we just talked about this thing. See? It's just a matter of I don't know how many more weeks that thing is gonna go sideways. It should make a way up. This is just the distribution phase right there in front of you. Um, but again, I'll get them. But there are some trades. Okay, don't. It's not like I don't like to trade or what. I trade. I take plenty of trades, and then the same time you're taking an earning risk. So I'm taking a little bit easy in an earning season. You could open a position, okay, to go up. If one of the big names is gonna hit, you're gonna take the punishment. Just keep that thing in mind. Because one big name is gonna shake the whole market. What do you think your stock is gonna do? That's one risk. So you're taking a punishment over a stock which took a hit. Or you can benefit from it as well. So you have that earning risk based on a bigger name. And then when the stock is getting closer and closer to the earnings, it's gonna start to stay more flat or starting to go more sideways because it's getting closer to the earning date now. It's gonna wait. That's another thing. So you're just literally wasting time sitting on that trade because you thought that the stock is going to, well, they have earnings coming in next 2 to 3 days. What makes you think the stock is just going to rip to the upside? You know, you see, earnings just going to put a big pause as well. This is why then at the same time, how you going to size a trade now? You want to open up a $2,000 size position on that one, $3,000 size position, was also you comfortable risking $2,000 on the earnings? I don't. So you just gotta have to wait it out for a few more days. Let this badge of earnings clears, and we're just gonna jump on. I'm watching these stocks. You think I don't wanna? I mean, I'll take plenty of shots. Finding stocks for me is not a problem, but you have to look at the overall picture. That how are you going to define the risk that you're willing to go into a trade? You know, like especially Microsoft. You know how many cloud stocks is gonna move at the minute the Microsoft gonna report earnings? Think for a second. Microsoft is such a huge company. It's gonna shake the entire cloud stocks. That's one thing. Then on top of it is gonna go affect the semi stocks. Same thing with Nvidia, like with semis, Broadcoms. How's gonna move every semi stock to the upside? Nvidia, same thing. These are the big market leaders. I mean, if they move, everything will move. Yeah, TSM reported earnings. You see, like next morning, I saw ASML was up like almost 25, 30 points. Just on them, for them being reported good earnings. It could be other way around as well. You just don't know that because you're trying to predict one company earning, but you don't know how your stock is going to get impacted with that because you sitting in the same sector. You have to consider all this, you know. So that's why I'm just not very comfortable throwing money on a trade in a very busy earnings season. You can play the earnings if you want to as a lottos, if you want to do that, but holding risk and then your eyes are on the other totally different company who has a same kind of business structure, but it just has the the connection that basically is gonna hit you hard. I mean, it can benefit you. Retail Target is down. Amazon is trying to make a move up. TGX no. Walmart too close. Costco is it kind of. These are the leaders. I mean, Costco just damn scary. Look at 14 is trying to 19 swing, 13 on a daily. This thing is just. I know. I don't know when, but just wait. This thing is gonna take a huge hit one day. I cannot time that for you, but I can tell you that this is insane numbering for these kind of swings. There's some of them are just getting dangerous. I'm not gonna lie. This is the way it is. Amazon is up, breaking up in a one. Google is bad. Google is Google is bad. Meta is worst. Nvidia is there are the very high swing counts right now. These stocks. Um, John Deere, see Caterpillar, they made this way out. That's why I was gonna. That's why I picked that one. But oh well, it's okay. I'll get him again. Um, where I was, yeah, I was at manufacturing. Yeah, I already did this. It's already up what 13% of the year. Cat is 12.37. So we have this one, Process Industries, Ecolab, DuPont, Lindy, Sherwin-Williams, Cartiva, Air Product, and there's nothing down here, you see? Some of them already made a move up. Non-minerals sector, we have Freeport. See, nothing down here that we can pick. So it's just healthcare, heavy. Eli Lilly is weak. Merck is weak. Johnson just literally close to this. We just looked at. It's horrible. Amgen, he said there's nothing really here, but I'm definitely interested in this Eli Lilly for sure. I want to own this stock. This is a Nvidia pharma, you know. This is a stock I would buy. Not right now. Let me watch. Let me watch. It's just, it's kind of, let me watch this rotation. See if I can make a move and a pullback here. Yeah, close an inside weak. And that's on a 10, so yeah. Eli Lilly, you should buy this one. Highest 972. Yeah, they have earnings coming as well. That's your 200 EMA right there's 800. So last time it failed. Now we're gonna see if it's gonna clear this hurdle. J&J ISRG kind of backed off on earnings. Just had earnings. I like this one, but this is just right there. Boom, 200 EMF backed off from here. Nah, not in a second swing. Amgen, that's the one we played last week. Barely made this way up to 275. The target that I was trying to. The healthcare just so tough. To here's your finance. No, here. So in a finance, why? Yeah, here you got the Crown Castle, AMT, Digital Realty Trust, Simon Property, Berkshire Hathaway Rail. Why is this categories and I did the sector. Yeah, it narrows it down in finance. Cannot be wrong. Hang on. Yeah, if I do sector here, yeah, that's fine. We were in finance right there. Well, we played this one. I was thinking about taking another shot at AMT. I like this stock to trade, and this stock has been good to me, to be honest. I'm not gonna lie. This stock has been really good to me. Pew pew pew. Every time I traded that stock, it's ended up always pays me. I don't want to jink it now. It just the swing turned down. I was really gonna take a shot. I did look at it yesterday. You see, it has these three lower bars. Can swing just turned down. The weekly is already down anyways. So we don't. Now we need to. We had a higher bar yesterday. We need two more by Monday, Tuesday. So we're watching this one. The other one I was gonna do the PSA. This one, public storage. So this is a good stock. Not a lot of liquidity though on the option side. You just gotta keep that thing in mind. This stock I think has it's gonna go. It has room to run. This one has a very good ATR as it's like a 20-point range. 20 point the stock moves on a weekly basis. This is really good. But the point now here is this. This stock is struggling at this 300 print. See that? 302, 301, 300, 299, 302. So your upside bet on this PSA is a 300 call. I don't know which one is gonna take that one off. Okay, it's a pretty range bound stock, basically from here. You see this right here? Well, not a very well-defined trend. Basically, the stock has been coming down, the double down 22.5%. But it has this and this thing is just not looking good now. Mm-mm-mm. No, I'll just hold off on that one. To the inch bound. Has a pretty good chance they can take another one more leg lower. I'll watch this one on Monday and stuff. Yeah, this is not. You see, it lost all this momentum going up. Now it's making a way down. This have a pretty good chance they're gonna take one more leg lower, then it's gonna make its way up. It's gonna go this way. It's gonna go this side anyways. But it's just not showing a good momentum. So I'll leave that one. Everything else, it just moved out of the way. Energy material, here you go. So you got, see, everything is here. Nothing here. Energy style, they all move together anyways. Here's your Honeywell. NVIDIA is here. AMD. Lockheed Martin. RTX. That's the one I was talking about. I think this is the one that makes those iron domes. What is this? This stock, man. This I like this. I like this stock right there. RTX. I'll be very into if it can get a little bit of a pullback. I'm gonna buy this stock. Start taking a. No, it was down for a couple of weeks. This strong 2 weeks has been up. This stock is. Yeah, right there. Well, it's gonna fight this 125 area. Can break out of 128. That's a three. See, it's a 3-point ATR play. Man, you gotta size up that trade pretty good, or just buy shares. You ain't gonna make that much on the option trade if you unless you size the trade up. That's the only way you're gonna make money on it. Or what do you mean? What are you gonna make out of it? 3 points, 100 delta, $300 if you cash the full 3 points. So where does it was 127 high minus 122 was five. See, if it's 5 point. 122 to 127 is 5 points. And it closed at 125. So you take 122 to 125, 3 points. There you go. Has your 3 points right there. Just a one standard deviation move. So if it makes the 5, 6, 7 point move, by Friday it's gonna close it where it's supposed to close. you know? So that what this stock will have has a good potential is because it's gonna get funded with all this government money, because if they're the ones that are making these iron domes, and the Trump plan is to put iron domes around the United States borders. He's been talking about that. He wants to install these iron domes all around the United States. I don't know. I know it's a safety, but I don't know who's attacking us. But if that's the case, this is a company to own. Then I mean, they're gonna get free money from the government. So basically all profit for them. So I'm gonna look at their balance sheets and stuff in later today. I'm gonna read their financials, see how they've been reporting earnings and how much debt they have, what kind of a cash flow, and all the stuff. I'll look it up later. This again, we have this all earnings are here. Here we have what consumer services. McDonald's are here. I have a hope, and well, I'm betting on Chipotle now, so I have a feeling Chipotle might take a. Chipotle premiums are so damn cheap. So I went out 2 months. Oh, like for $2 premium. I don't know how often do I buy $2.5 premiums. I don't think so. But I would just grab a few calls and let the thing work for now. We'll be okay. We just gotta give few more days for this Chipotle to kind of make a move up from here. Chipotle should move. We'll move. We'll pay something. Mm, I hope I'm right, but it should be okay. I like the rotation of Chipotle. That's why I'm willing to take up because Chipotle and um, Tesla and the XLY, so these stocks are um, are all starting to make a move up. So we have what do we have? Consumer non-durables. Oh my, it's terrible. Core Procter, this just Nike. There's a Tesla. Interesting. Tesla is the only one in consumer durables. Rest of them are consumer non-durables. Huh. Communication is only T-Mobile. Because I'm sure there's a bunch of other stocks as well, but these are the biggest market cap stocks. That's the only list that I made it. Commercial services, we have Mastercard, Visa, and S&P Global. I mean, there are a bunch of other ones as well, but these are the top leaders. Now, if we do 50 with you have no idea what it takes to find trades. These are the ones are on a 10th decile. The 10th decile means that the stocks they are the most further away from the benchmark. Okay. So these are the stocks is gonna have the most alpha out of any other stock. But which direction they will move, well, we don't know that. That's the direction that we have to decide. So I have this thing. These are top. This is the S&P 100 stocks. So these are all the 100 stocks of an S&P. But I have them narrow it down with there's 10 different deciles. Decile is the distance it takes from the center of the for the benchmark. Okay, how far is the security is willing to make, is making a rotation around the benchmark. So that's the Apple. The reason Apple is taking a hit is because is the one that is moving further and further away from the benchmark. So meaning that the stock is going to take a wider rotation when it's going to come into a play. So we'll watch. So these are the stocks in the 10 decile right now. And then we'll go to the ninth one is these ones. These are the ones this is why the DE and CATs are moving. You will see which stocks are moving. Your RG will confirm those stocks' strength. The alpha that the stock is moving is based on. So your Caterpillar is right there. these ones right there, we're gonna have to watch. The BKNG is it's down here. So on the 8th is good. Is these ones. So I'm hoping that's why I was watching the CRM. I'm thinking the CRM, I don't know when they report their earnings, but I think they should be okay. This is us sitting on the 10th. These keep in mind these are 100 stocks. So 100 stocks, it just narrows only down to the exact distance and everything has to match. So everything is in there. That's how I look for stocks, which to bet on, which to buy, then have to go to a chart, then look at the swings and stuff like this. This is a mess. This is the nights the 1 and the 7. So I really don't like if you want to go to the 1, see? Now these are the one the stocks which are on the distance by decile, which is close. These are the ones that literally has more no alpha. So these I'm not interested in trading those stocks at all. You know, so I don't look for something like 1, like 2. You see how close they are. You can get a move, but I don't know what some people expectations are just so damn like every trade has to hit a jackpot or something. But some you can catch a 2 3 point stock will move. It doesn't mean the stock is not going to move because it's sitting too close to a benchmark. I mean, stock will move, but you just don't. If you're willing to make a swing trade, you just don't get that. Like it's going to take that time to complete the rotation, and you just basically trying to find that alpha that these ones doesn't have much. That's all. So this something you can compare first. Now compare 10. You see the distance? Because I had them narrow it with the distance. So it's going to show me exactly which stock is. So so as me as a trader, when I'm trying to buy something at the bottom or trying to post a trade for everything, I'm always looking into a 7, 8, 9, and 10. These are the stocks that I would be interested in buying. Like, something I'm always going to start with is 7 because if I want to buy something, I want something to make good money on. Like, stock has to move. So, I mean, AMD is a possibility here, but it's in a full swing down. I mean, plus is a failed company anyway. So, um, rest is it's not gonna pop up the chart here, but I have them down here. Yeah, with my fancy clouds. Here's the RTX. It's too busy. There's the swing up. So I look for those ATRs and bet on something and see if it looks good. Yeah, yeah, means you could get this on some free. I think Ruben has it. You can get this, but you can't just bet on something. Just look, I mean, there's a lot of stuff goes into it. I mean, it helps, but to kind of because you want to buy something here, I mean, it's kind of hard to buy something up here, because a lot of the move has already been done. I mean, you can get something here, you can just kind of start to chop around sideways. So, like, yeah, you need a good wave count, or if you need a good swing, and then you need those fibs and stuff to kind of like, okay, well, if you do play the upside, what would be my upside potential, target would be. So you need that strong kind of, I mean, looking at that RRG, it's just, yeah, it gives you the hint, but it doesn't mean it's going to place the trades for you. If this is the way to only trade, I would buy left and right all these stocks. You gotta spend time looking at the actual chart itself. Where you gonna find the support? Where is the resistance? Things like this. That's the actual price. I mean, you can pop up the chart. I can open up a chart. There's a chart right there. If I want to look at BlackRock, so it's a BlackRock right there. So you want to do, okay, where is your top level right there? Bottom is here, right? So so you sit right in the middle between top and bottom. Where do we go next? So we can go here, third swing up. So you have, that's a BlackRock. So then draw your fibs from this low to this high. And now you're thinking like, okay, so I am pretty much, I think, right in this 50 mark. So would you willing, now the question is, would you willing to make a bet to the upside toward this print? That's your bullish bet. And if the price backs off here, so it doesn't, it's just because the stock is right in the middle between these two declines. So the third swing right there just got tagged. BlackRock here showing that it will improve. If that's the case, that we might, oops, I close the chart. So we might make a move back toward this high. Okay. So that's the bet that you could consider. $1,000 it's not ain't cheap either. So you have this. Draw this thing here. So you can just change this weakness along with the, and move this as your rotation right there. See when the stock was declining. Oops, where it went? Right there. So I'm going to move a line per day. Was trying to fight to make his way up, but this got a smack right there. Boom. All the way down. And now it's right there. So from it bottoms here, that's where I put the low on, on the 13th. Then from the 13th, you see even the fact this thing is still down, but the stock is trying to recover. And now from here, see, sometimes it gives you a couple days. It doesn't give you instant rotate the confirmation. See, now it's trying to form a curve, right? Trying to form a hook right there. After how many days? 1, 2, 3, 4, 5, 6, 7. Like how much upside is that alone? From 943 almost to 1,000. That's 60 points. That's a hell of a move. You see, you gotta pay it. That's what I'm saying. That don't go to the free stuff you come across like, oh, I got the RRG, I know which stock is. No, because you don't have this and like the to weigh exactly where the bottom was placed and where the rotation was. You see, it didn't even form a hook here. Same thing I will show you now on Apple. Where it went. You have to see the rotation, see when exactly. Oh boy, stay here, buddy. Um, it's right there. I have these RG lines right there. You see the blue and the red one. So Apple started the journey here, right there. So from Apple, from here, we already knew this pushing toward the weakening quadrant and it's coming. There you go. Day by day, the stock is selling off and off. I'm moving that line. See how RRG confirms the weakness? It got the 2 days bounce. Didn't move much. Now it's pushing toward the left. But look how much distance the stock is took from away from that thing. Look how deep it's getting now. Further and further away, you know? Now from the last, this, this, this. Now it's completely gone flat. So the line just has no curve. Like at least here you got the bit of that curve right there. Now you look how flat this line is now. That's what I'm saying. It looks bad. Like it looks horrible. It's not doesn't mean it's gonna stay like this. It definitely is gonna turn around. See how flat the line is getting now. Like freaking like Apple is like running like it's going bankrupt or something. So I'm gonna watch from here. It could go a little bit more here, but it'll turn around. I'm not worried about Apple. Don't ever. I know Apple stock. I won it for 23 bucks. I'm not panicking. Don't worry, let it work. It'll be fine. The stock just, you cannot go wrong owning Apple. It's hands down pays dividend. It's just, it's a good stock. Every uh, portfolio, the guys who manages huge funds, the clients have their money in Apple. I guarantee you that every big, like, couple $1 million worth of a portfolio people have, they own Apple. Every financial advisor, whatever, trying to make a portfolio for you is going to buy Apple for you and Microsoft. These two stocks, everybody has it. They're the top leaders. Okay, party's over. I'm tired. So I did the ones for him, so he should be okay.
Oh, can you show the top 10 decile RRG again?
Which one you want to see?
Top 10 decile. Yeah, that one. Yeah, can you open that up again?
Yeah, Apple's in there. And Broadcom. But Broadcom has made a move quite a bit as an earning, so that is all because remember the Broadcom is kind of going sideways. I'm gonna stop this recording. Hang on. Stop recording.